All right, let's get right into it. The global silver market is in absolute turmoil. Today, we're going to break down how this often overlooked metal has suddenly become the white-hot center of a major supply crisis.
And it really kicks off with this pretty stark warning from Tesla CEO Elon Musk, which he posted as silver prices started to just shatter records. When a guy who's at the forefront of electric vehicles and tech gets worried about a commodity's price, something big is happening. Just to put this into perspective for you, silver prices shot up by roughly 166% in 2025 alone. This isn't just a rally, it's a truly explosive move that has caught the markets completely, and I mean completely off guard.
So what on earth is going on? This isn't your normal market volatility, not by a long shot. No, this is a fundamental supply crisis that analysts are now calling the Great Silver Squeeze.
And to really wrap your head around the sheer scale of this move, just look at this. Silver's value isn't just rising, it's launching into orbit with the kind of momentum we usually see in tech or AI booms. It's a massive signal that this story has some really huge implications.
So how in the world did we get here? Well, this wasn't just a single event. It was more like a perfect storm, A whole bunch of different factors all converging at the exact same time to create this global shortage. It really boils down to three core drivers behind this squeeze. You've got a supply shock from China, a market that was already running on fumes, and this relentless industrial demand. Honestly, any one of these would be a huge issue on its own. But all of them together, that's what's created this completely unprecedented situation.
First up, China. On January 1st, they just changed the rules, seemingly overnight. By rolling out these new export restrictions, they effectively weaponized their control over 60 to 70% of the entire global refined silver supply. It's a playbook we've seen them run with other critical materials in the past.
And second, you have to understand, the market was already under immense stress. It had been running a massive deficit for 5 years straight. In 2025 alone, global demand outstripped the total supply by over 230 million ounces. That's a shortfall that's basically equivalent to the entire annual production of the world's largest silver-producing country. Just gone.
Now, this intense supply crisis has really ripped the Band-Aid off a deep structural flaw that's been lurking in the silver market for decades. It's created two very different worlds, the world of real, actual metal and the world of financial promises.
So on one hand, you have physical silver. We're talking actual metal bars sitting in vaults, and the inventories of that stuff are just plummeting. The major COMEX exchange, for instance, has seen its registered supply fall nearly 70% since 2020. But on the other hand, you have paper silver. These are financial contracts, things like futures and ETFs, and they're essentially IOUs, traded as a convenient substitute for the real thing.
And here is the absolutely crucial point. For every single ounce of physical silver that's actually available for delivery on the exchanges, there are 356 ounces of these paper claims. It's a dangerously over-leveraged system, just waiting to snap. And that imbalance finally came to a head in what's being called the vault drain crisis. In late 2025, there was a sudden mad scramble for real metal that saw over 60% of the registered physical silver claimed in just 4 days. And that proved that the paper promises simply couldn't be kept if everyone asked for their metal at the same time.
So who's demanding all this physical silver? Well, investors are definitely part of the story. But the single biggest driver isn't speculation at all. It's industry. See, unlike gold, which is mostly held for investment, while over half of all silver consumed every single year goes directly into manufacturing and technology. This is silver's unique dual role. It acts as both a monetary metal and an industrial metal. And it's a critical component, often with no substitute, in the world's highest growth sectors: solar panels, EVs, semiconductors. Its unique properties just make it indispensable. And this creates what economists call inelastic demand, which is just a fancy way of saying factories have to buy it to keep production lines running, pretty much no matter how high the price gets.
So you have this collision between extreme physical scarcity, unstoppable industrial demand, and these fragile paper promises, and it's creating massive instability. It's fundamentally reshaping the silver market for the foreseeable future.
What we're seeing now is a huge price divergence. In markets like Shanghai, where they trade the actual physical metal, prices are soaring above $80 an ounce. Meanwhile, the paper futures contracts in New York are lagging way behind, which reveals a total breakdown in trust between the two.
In response to all this chaos, exchanges are hiking their margin requirements. You can think of it like increasing the down payment you need just to be able to trade. Now, this is meant to reduce risky speculation, but it also makes it too expensive for smaller players, and it pushes them right out of the market. This whole crisis really forces us to ask a fundamental question. When physical scarcity crashes head-on into these financial promises, what does price truly even mean anymore? But one thing is crystal clear. The era of cheap, underestimated silver is over. The world is finally waking up to the critical importance of a metal it has taken for granted for far too long.